Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about ROPER Technologies Inc. quarterly report. ROPER Technologies Inc. offers a diverse range of businesses and services across various industries. Some of the key areas include application software, comprehensive management software, laboratory information management, enterprise solutions, K-12 school administration, transportation management, financial and compliance management, cloud-based payment processing, campus technology, and financial analytics. Network software, data collaboration, estimating automation, electronic marketplace, visual effects, life insurance and financial services software, supply chain software, healthcare services, data analytics, and pharmacy software solutions. Technology-enabled products, ultrasound accessories, dispensers, wireless sensor networks, automated surgical equipment, water meters, precision measurement systems, RFID readers, and medical devices. Autism and IDD care software, a platform for therapists serving children and adults with autism spectrum disorder and related intellectual disabilities. These businesses and services are distributed through various channels, including direct sales offices, manufacturers' representatives, resellers, and distributors. ROPER Technologies Inc.'s stock price drop. A multifaceted analysis in the past year, ROPER Technologies Inc. (ROP) has experienced a significant stock price drop of over 17.19%, reaching a 52-week low of $444.09 on October 30, 2025. This decline can be attributed to a combination of factors, including analyst downgrades, a mixed earnings report, and broader market shifts in investor sentiment. Analyst downgrades from prominent firms such as RBC Capital Markets, Mizuho, and J.P. Morgan Chase & Co. contributed significantly to the stock's decline. These firms cited limited upside potential and growing uncertainty about how artificial intelligence, AI, will affect ROPER's diversified application software model. The mixed Q3 2025 earnings report, which saw adjusted EPS surpassing analyst forecasts but quarterly sales falling short of expectations, further exacerbated the situation. Broader market pressures also played a role in the stock's decline. Near-term challenges such as deal dilution, slower government spending impacting its Deltek business, and copper tariffs affecting its Neptune unit created headwinds for the company. Additionally, investor sentiment has shifted towards more cyclical and higher beta stocks, moving away from high-quality compounders like ROPER. The complexity of integrating new acquisitions amidst uncertain AI impacts and broader worries about slowing global growth and industrial sector headwinds have also influenced the stock's decline. As a result, ROPER Technologies Inc.'s stock price has taken a hit, reaching a 52-week low in October 2025. The primary drivers of revenue growth or decline can be identified through a review of the financial summary provided. On the growth side, recurring revenue from SaaS and annual term licenses increased by 34% year-over-year, while transactional and volume-based fees facilitated through software grew by 44%. The application software segment saw significant growth due to acquisition contributions from Transact and CentralReach, as well as broad-based organic revenue growth. Additionally, the technology-enabled products segment experienced a 7.1% increase in organic revenues. On the decline side, the network software segment was negatively impacted by end-market conditions in media and entertainment software business. Furthermore, the technology-enabled products segment saw a decrease in backlog due to normalization of supply chain ordering patterns. These factors highlight the key drivers of revenue growth or decline for the company. Net income and profit margins experience growth. The company's net income has shown a significant increase of 8.3% quarter-over-quarter, (QoQ), in Q3 2025, reaching $398.5 million compared to $367.9 million in the same period last year. Year-to-date YTD, net income has also risen by 14.1%, totaling $1.107 billion. Profit margins have also seen an improvement, with gross profit margin increasing from 69.2% in Q3 2024 to 69.6% in Q3 2025. Operating profit margin has also grown, rising from 28.1% in Q3 2024 to 32.1% in Q3 2025. The reasons behind these changes are attributed to several factors. The company's legal entity restructuring led to a favorable tax rate impact, contributing to the increase in net income and profit margins. Additionally, the acquisition of Transact, CentralReach, and Procare in the application software segment has positively affected the company's financial performance. Furthermore, higher payments revenue mix at Transact and Subsplash has also had a positive effect on gross margins. The company is generating a significant amount of positive operating cash flow, with a notable increase in net cash provided by operating activities. In the first 9 months of 2025, the company generated $1,802.3 million in operating cash flow, up from $1,671 million in the same period of 2024. This indicates that the company is efficiently managing its operations and generating sufficient cash to support its business growth. The company's debt level has experienced a significant change from 2024 to 2025. Long-term debt increased by $2,574.2 million, rising from $6,579.9 million in 2024 to $9,154.1 million in 2025. The total debt also saw a substantial increase, reaching $9,454.1 million in 2025 compared to an unspecified amount in 2024. In terms of interest expenses, the company has seen a notable rise. Interest expense, net, increased from $67.7 million in 2024 to $89.7 million in 2025, representing a growth of plus 32% over this period. This increase is consistent with the trend observed for the 3 and 9 months ended September 30, 2025, where interest expenses rose by plus 15% and plus 11%, respectively. The significant jump in debt levels has led to an increase in interest expenses, indicating that the company's financial obligations have become more burdensome. Management is optimistic about the company's outlook, aiming for consistent and sustainable growth in revenue, earnings, and cash flow. They expect stable segment operating margins with minimal changes in gross margin and selling expenses. The company will focus on operating leverage to improve SG&A expenses as a percentage of net revenues and invest in strategic acquisitions. With sufficient cash balances, management plans to fund operating requirements, repatriate earnings, and reduce debt through positive cash flows from operating activities. The company has a history of paying dividends to its stockholders. In the past 2 years, it has paid out significant amounts in cash dividends. Specifically, in 2025, the company paid $266 million, and in 2024, it paid $241.1 million. The dividend payments were made on several occasions throughout each year, with notable payments including $267.8 million in December 2024 and $89.4 million in June 2025. Concerns about inventory buildup and supply chain disruption exist. The financial summary highlights potential issues with inventory levels and supply chain disruptions. Unbilled receivables have increased by $13.6 million, suggesting possible inventory buildup or supply chain problems. Additionally, geopolitical and economic uncertainties may lead to supply chain constraints and disruptions. However, these concerns are not consistently supported throughout the report, leaving some uncertainty about their validity. That concludes the financial summary for Roper Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.